let's just focus and talk about the sectors which are seeing a bit of a momentum. Today, of course, it's been a bit sluggish, but throughout the week, we saw quite a bit of action when it comes to the cement names. Autos have been doing quite well. So let me toss it across to Sandeep as well, because auto is one of the top performing sectors of the week so far. What are the top bets, Sandeep, coming in from the auto sector? Is there a shift now? Maybe perhaps book profit out of Tata Motors and get into other names, two-wheelers maybe?
See, it's very it's very difficult to predict a short-term strategy, what people should be doing every day. Now, directionally, we have to play the stock. So directionally, I think Tata Motors showed the first signs of turnaround just 2 quarters back. The turnaround is now gaining steam. I think the stock will go much higher over the next 2 or 3 years, and that's what we have to play for. We cannot be playing for shifting from companies which are doing well to companies which might or might not do well.
So, Sandeep, the next obvious question is, what do you think might do well from here onwards as well?
So on the auto side, I think companies like M&M, Tata Motors, Maruti, all of them are doing well in their respective spaces. The RM cost pressures have eased off significantly, and interest rate pressures should also be stable or moderate going forward. So I think things are going well for the auto sector overall. If there's an uptick in the economy also and inflation remains stable, uh, and that will promote more discretionary spending. So that's something we need to see as we run up to the festival season. Now, two-wheelers is something which has done well recently. The jury is still out on whether this is a sustainable recovery or at what pace it will recover, because I think at the lower end of the pyramid, the demand constraints still seem to be playing out.
You were one of the first ones to spot the trend in M&M, right? And I recall our conversation when the stock was around, I think those 700 odd levels, that there is going to be significant upside to it. From there, it's doubled now to 1400 thereabouts. What next for M&M? Does it take a backseat? Do you see leadership in Tata Motors or underperformers like Maruti?
No, I think the underperforming phase for M&M is behind us now, because I think start of 2023, there was actually likes of Bajaj Auto, not exactly four-wheelers, but Bajaj Auto, Hero MotoCorp, Eicher Motors, they started to perform very well. Even Tata Motors picked up pace, and M&M underperformed. I think, if I'm not wrong, the stock corrected from 1400 to 1100, 1150 thereabouts. And the recovery in the last 1 month is quite incredible, because this reinstates the fact that the stock, which went through a very strong uptrend, then a corrective phase, is making almost a V-shaped recovery. This again puts M&M back into the top leader, place from the entire auto pack, right? At place with the likes of Tata Motors. So I think from current levels, the prospects looks far more better for M&M, and the 300 point drop which we had seen for the stock from 1400 levels to 1100 approximately, I think we could now be expecting the stock to head towards 300 point on the upside, 1700, possibly in the span of the next 6 months.
Okay, since we are talking auto, let me complete that point. Naresh, a couple of these ancillaries are quite active in the trading session. JBM Auto over the last 2 to 3 days has seen quite a bit of spike. And the second one is car trade, which is seeing a 7% spike today, was up almost 7 to 8% yesterday as well.
So JBM Auto is a tough one, because the stock has moved up from 800 just a day back today to almost 950 levels. The risk reward is not great, so would be an avoid. Car trade could be interesting, because that's a stock which has gone through a deep correction, which we've seen in a lot of these stocks which fell 50-60%. The stock made a bottom recently around 350, 400. For now, I would expect it to face a lot of resistance around that 530 to 550 mark. And post some consolidation, may want to look at it. The stock seems to have made a major bottom, but would like some bit of a fade off towards the 480, 500 mark to get an entry point. At current levels, the risk reward is not great, but the price action over the last 3-4 sessions indicates that a bottom is in place, and over the medium term, the trend could be changing.
Kunal, Eureka Forbes as well as Torrent Power, both of these counters have seen big moves this week. What would you do with both of them?
So Torrent, Eureka Forbes, I don't track, so I'll skip that. But Torrent Power is again a very interesting chart. In fact, most of the power stocks actually started to move up in just the last couple of days. But then Torrent Power was one of the first ones. I remember, I think last expiry, if I'm not wrong, was the last expiry for the stock in the FNO. It was at 525, 530 odd levels. And from there, post the stock coming out of the FNO, the stock has moved almost on a one direction upside. Now the last 4-5 days, the intensity of price rally has intensified for Torrent Power, but this skews the risk reward for a fresh entry. So traders who are actually looking to try and cash on to the momentum, I think at this point in time should actually go into a wait mode, because typically after such a sharp uptick, the stock gets into a periodic phase of correction or consolidation. So it's better to buy the stock in corrective phases. But yes, Torrent Power is one of the first ones which has actually moved up significantly higher from the entire power pack. So maybe closer to 625, 620 could be a good zone to buy the stock.
Let's bring up the stock price of Paytm. That's been on a tear, like I just highlighted. Bank of America Securities has upgraded the stock to a buy. They've raised the target price as well from the earlier 780 to now 885 on Paytm. They're saying that the risk reward is more positive. They're well positioned to dominate the SME merchant landscape. The operational leverage, they're saying, has room to surprise and can surprise even on the consensus estimates, saying that they're in a sweet spot with limited competition. Digitization drives payment growth, and they are one of the key beneficiaries of ONDC traction if it were to pick up, and disclosures have materially improved since listing. And I guess, part of it, Sandip, has also showed on how the stock has actually recovered, Paytm that is, from those previous lows. 772 now on Paytm. Wanted to understand, where is it that you stand on Paytm now?
So it's tough to build a case for any long-term buy on this company, especially after it's rallied so much in the near term. Most of the points which you were quoting out of the brokerage report, I think they have no merit. So I think the competitive intensity is huge, and in terms of a majority of the profits of Paytm, they are largely coming from the commissions they earn out of originating loans, which cannot be given a high price earning ratio. The core business, if you remove the profit they are reporting out of that, then the core business remains as it is. The only thing which has improved in many of these companies is that these managements realized they cannot keep on raising equity at higher and higher valuations, and to that extent they have to control costs, and that control of cost has led to improvement in PLN, which is good. So, but how long that can help the company sustain their current performance as growth slows down is something we need to see. So I'm not very convinced about the arguments which many of these management systems are putting. So I might be wrong, but I'm not buying.
So Sandeep, where is it that you're putting fresh money to work, if at all, at these levels in this market?
I think we have to selectively keep on buying into companies which are doing well, where we see debt under control, which are seeing traction. So auto names, some auto ancillaries, auto names we already discussed, ancillaries. I think the larger banks, ICICI, Axis, etc., will continue to do well. So on the large cap space, even Bharti has consolidated for a long time. It could give decent double-digit returns from here. On the mid-cap side, focus is again on some auto ancillaries, some consumer names, but those have seen some run-up, so we need to wait for them. And then some infrastructure, capital good companies where results are good, order flows are strong. So I think those are the segments which I'm focusing on.
So those are the key segments that you're focusing on. Time for a quick break, but as we do that, let's take a look at the chart of IEX. That's seen a sharp downtick as we speak, a cut of almost 5% coming in there. And the other one is Tata Communication, which continues to languish in the red. It had actually started out with a green tick of almost 2 to 3%, but completely cooled off and now down almost 2%. In fact, as we slip into this very short break, listen into what the management had told us, because of course there were big commentary coming in about doubling the revenue, but how will they scale up that and how will the margins trend? Listen into the management.
Even the 23 to 25 would be challenging. I mean, if you thought the doubling the data revenue is ambitious, keeping this to 23-25% will also be ambitious. The reason I'm saying that is in our digital portfolio, we have a mix of products, right? So starting from what industry calls as a CPaaS, and we would like to think that's more of ours, slightly different with the customer interaction platform. And if you typically look at those margins would not be very high. If you look at the connected solutions, there the margin profiles are very different. In the next gen connectivity with internet and others, that margin profile is different. So in each of the portfolio, and within those, the mix of the products, the margin profiles are very different, right? And therefore, it depends on which product is going to accelerate faster than something else. The mix will play a very prominent role in terms of, and that is why you saw in the last couple of quarters, as we raised our investments, the margin profile was declining. It's a function of both the investments that we made, and it's also a function of the product mix that is being taken to the market, and therefore the mix and this will play an effect on the margin. Therefore, will have a tendency to depress. And what we are working on is for each of these products to have a glide path to increase their own margins, right? And we are hoping that, and we are working on that as that increases. And as the mix plays into effect, we can remain in the 23 to 25% range.
Okay, welcome back. The market is now slipping quite a bit, 18,644. So at the lowest point of the trading session, taking a knock in the last few minutes itself. Maybe that, weekly options expiry will come into play in the next few minutes. But the other stock which is taking a bit of a knock is IEX. Now that's down as much as 7%. Seems like that the government has floated a paper which is going to consider coupling, which basically means that going forward, the monopoly that IEX has this point of time of the trading that happens and the price discovery that happens, that might go away, and that might move on to Postoco. Also, the market-based economic dispatch might also move away to Postoco. So whatever is the competitive advantage that IEX has at this point of time in terms of the price discovery, we keep talking about how the IEX rates are trending at 6 rupee, 8 rupee, etc. That will now go away, and it will become a mere trading platform of sorts. So the importance of IEX might decline a bit, and that's the reason you're seeing a bit of a reaction. We of course have to get more details on that, because for now it's just a consultation paper which is out, and what will be the exact impact of coupling, etc., we'll have to get more clarity on. But for now, an incremental negative coming in on IEX, and that's the reason that stock is down. Quickly, let's get a technical check as well on this one. Naresh, IEX.
So the stock has been making these moves for the last few months. Every time it has gone to that 155 to 160 band, the stock has not been able to break out. It tried to do so, stayed there for almost a month, month and a half, and something or the other, there was a result-based down move last time. Now there is a down move due to some announcement. 130 again remains a support. So till the time it holds above 130, we can keep expecting this bounce back moves. But a clear trend is not visible out here. 130 is a support, 160 is a resistance, and we are just flipping back up and down in this range. So as of now, short-term breakdown done. We've gone below that 155 marks, and then 130, 35 is where it should take a pause.
Okay, that's the take coming in as far as IEX is concerned. That's the sole power stock which is actually in the red at this point of time. But in terms of the other sectors, Sandeep, have not been very, very gung-ho about the entire, pharma and the healthcare space. But is there any name that you would start looking at? Maybe a hospital name, the Fortis, Apollo Hospitals, Medanta of the world, or do you think the valuations have now become a bit more expensive?
Well, the companies in the hospital space are doing well, right from Medanta to Apollo to Fortis to Rainbow Children Hospital, Naran Hridayalaya. All these hospital companies are doing well after a phase. But like you rightly said, the valuations right now seem to be a bit excessive, given the fact that once the base rate profitability has improved from here on, the growth might be in either high single digits or low double digits. So I think that's something which you need to factor in. So I would think that this is a good sector to be in, but at slightly lower valuations.
Okay, that's the take coming in on the healthcare space. But since we were talking about some of the power names and telecom as well, just look at Telecom right now. Just want to bring up that stock because telecom definitely as a sector has been seeing some fresh, renewed vigor. We were just talking about the charts of Bharti. Even the kind of trading moves that you're seeing on Vodafone for the last two trading sessions have been phenomenal. Today, of course, Telecom and most of these stocks are falling with the rest of the market. But Motilal Oswal maintains a neutral rating on Telecom. They've put a target price of 1350 thereabouts in the share, saying that the management in their analyst day has reiterated improved funnel of new deals. The silver lining is its strong FCF, and that they see a sustained improvement in earnings growth visibility that's going to be vital for their valuation re-rating. So they continue to hold a strong on Tatacom. But Kunal, let's revisit some of these telecom stocks, because clearly yesterday's action or traction, I should say, has fizzled out.
Yeah, it's fizzled out, but I think for Tatacom, in the last, I think 4 or 5 days, the stock has moved up from 1200, 1220 to 1420. So it's almost a 200, 220 point jump for a stock like Tata Communications. So it's bound to be that there could be some bit of profit booking. And of course, given the kind of market churn today, many of the stocks which have performed exceptionally well, there's bound to be profit booking into these kind of names. What we need to actually watch out for is that the intensity of sell-off, does it replicate the same over the next couple of days? If that's the case, then we could be looking at a much more sharper reversal for the likes of Tata Communication. Bharti Airtel, inherently the stock, we discussed this last time, that the stock is inherently a very low to moderate beta, and typically when you see a stock going into an uptrend, it's a very staggered kind of uptrend, and on the way down as well in a corrective phase, the stock goes into a very shallow kind of a correction mode, like what we've seen today for Bharti Airtel, just comparing it like to like with respect to Tata Communication. So I think that's one of the reasons why I would believe that traders have to be very, very specific. Bharti Airtel still looks very attractive. Telecom, if in case the correction halts at 1350 mark, could be an attractive bet.
Right. Okay. NIIT, let's just take that stock out for you, because the demerger happened and the B2C business now trades at about 103 rupees per share kind of valuation. I don't know if we can bring in Sharad right now to highlight what really happens after the demerger and what's in it for the shareholders now. Sharad?
Well, yes, in focus we are having NIIT as the demerger has taken place of its B2C arm, and now the B2C arm is listed on the bourses. Now the B2B arm is expected to be listed in the coming weeks, and do remember it's a highly profitable segment of the company. Now NIIT is having two businesses. The B2C, the NIIT version which is listed, is the retail learning part, and to make it clear, the wholesale learning is basically the corporate segment which NIIT is catering to, and roughly the B2C business is expected to have roughly 715 crores of cash levels post the demerger, while the number is 572 crore rupees for the B2B business. Now the shareholding pattern that it was announced was going to 1:1 in a mirror shareholding pattern of roughly 13.5 crore shares. Now looking at both the companies, the B2C business, the market value is coming up to be almost roughly 1400 odd crore rupees, while on a calculated basis the B2B business is expected to come in at almost 4100 odd crore rupees. Now looking at, of course, the valuations, the unlisted B2B business is expected to valued at more than 20 times its P on a calculated basis, and the price which is expected in the market on a theoretical basis ranges between 295 to 300 rupees per share.
Okay, so that is about NIIT Tech. Stock definitely soaring in the trading session, but stock seeing a cut in the trading session. And this is a technical adjustment that really happened. So it was trading at 400 bucks yesterday. It's down to 100 bucks on an adjusted basis, because the value of the demerged entity is expected to be 300 rupees. That's the B2C vertical, which is more margin accretive, and that's something which has been doing well. The company has been talking about it for almost a year now, not completely new news, but of course a technical adjustment at play here. But shifting focus to the other buzzers in the markets today, and it's real estate which is seeing a bit of a profit booking. Sandip, what's your take on the real estate pack? Of course, the interest rate decision today was positive, but nonetheless, we are seeing some profit booking there.
I think the main reason is that these stocks have run up a lot, and to that extent, there is a possibility of consolidation, some sort of correction. And because when stocks run up a lot at higher levels, many retail investors and traders get in, who then try to get out as soon as there is some corrective move. So I think these things will continue. So right now, I would think that they have run up a lot, and we need to see some sort of corrective activity for them to become buyers again. Long-term outlook is still positive.
Deep, great to have you on the show as always. We let you go on that note and see you again tomorrow morning. Let's take some closing ideas as well from both of our experts. Kunal, what's on your list?
So I'll go with Maruti as a stock which I think is still holding up towards the 9600 mark. So looks attractive, and possibly over the last 2 days the stock has already corrected. So could be a good contra bet at current levels.
Right. Naresh, what stock do you have on your radar?
So that would be NTPC. The stock has hit a new 52-week high, a new all-time high on a dividend-adjusted basis. A good breakout today, so that's a stock which could do well over the next few sessions.
Okay, we're going to take a very quick break on that note with news that we're now testing that 18,700 print even on the Nifty futures. We're down a good 81 points, as that's a 100-odd point fall that you've seen from the top of the day. We'll take a break, be right back, continue analyzing the market.